Take a look at the very latest in the world of business. The JSE looks set to open a global sentiment, That's amid some hawkish commentary from central bankers as well as mixed news out of China. For an update on the latest market-moving business news, we're joined by Matete Thulare, who is the head of foreign exchange execution at Rand Merchant Bank. A very good morning to you, Matete. Thank you for your time. The Rand remains under immense pressure against major currencies. How much of this slump has to do with the local electricity crisis?
Good morning, Mpho, and I suppose that it's the last day of June as we head into the second half of the year. And as you rightfully say, already the Federal Reserve Bank out in the US and other major central banks are hiking rates aggressively. There is a talk now of a real risk of a global economic recession happening in the first quarter of next year. So on the back of that, obviously the Rand has went to the 1620 level. We are thinking that potentially we could face a harsher test at 1630. This is the post-pandemic high that we've seen where we got up to 1635. But as you say, the local factors which are obviously driving most of the Rand losses are perhaps, at the point in time where it's a perfect cocktail given what's happening from a global backdrop and also the local issues with regards to Eskom. That's obviously having a lot of negative sentiment, especially in terms of economic growth and obviously production in the local market. But, the sharp Rand underperformance is mostly due to the stage 6 load shedding that we've seen over the past 2 days. Eskom reportedly offering 7% to the unions, and that looks most probably, it looks like it might happen, but obviously the formal vote is tomorrow. But some unions are obviously, as you said earlier, reporting that, they're asking workers to return. Hopefully that will get the power grid under, at least some less severe strain. But the big event risk is obviously today where we need to have confirmation of whether the Eskom wage deal will either happen or not. But, the global environment also has added to the Rand weakness, and obviously there's high risks in terms of what the other central banks are going to do. And also remember, as we go into the month of July, we've also got, the local reserve bank, so Lesetja Kganyago and team will be obviously looking at that. And given where, the likes of the commodity prices, the oil prices, where the Rand is factoring in, and obviously the potential, 2 Rand increase in petrol prices, that's obviously going to be something that, the guys out in Pretoria have to look out at in the next 3 weeks when they have their meeting. So all these factors will obviously factor through into what happens in the Rand in the second half of this year.
Absolutely. Oil prices are set for the first monthly decline this year before OPEC plus the meeting takes place. Talk us through perhaps some of those developments.
So it's been an interesting 24 hours in the oil market. We've seen oil prices edging slightly higher this morning after dipping early on in the early hours of this morning during the early Asian trade, obviously on the concerns about a global supply tightness, which has outweighed a build in U.S. petrol inventories. The drawdown has been driven by refiners obviously increasing their throughput amid, historical high refining margins that we have seen. Already crude inventories have fell by about 2.8 million barrels in the week to the 24th of June, which is exceeding market expectations. But also remember, there's been further disruptions to the supported and elevated prices amid the suspension of Libyan shipments from 2 key eastern ports out in Libya, and also in Ecuador. We've seen output there also falling due to the ongoing protests. So obviously, on the back of that, and also the recent central bank aggressive hikes and a slowdown in the global economic growth outlook, that is obviously putting some pressure on the commodity markets. There's also concerns that, the slow economic growth that we could see in the next, 12 months, potentially with this talk about a recession, that could continue to obviously cap the oil price gains that we've seen. We've seen oil prices going to about $120 a barrel. It's now back around $110 a barrel. So obviously there is concerns that, if the world is not growing, if there's not much production, then potentially that could obviously, cap the price of oil.
And private sector credit in South Africa rose by 5.34% year-on-year in May after rising by a revised 5.87% in April. Help us make sense of that data.
So as you say, I mean, obviously that credit number is up 5.3% year-on-year in May, but you know, the credit demand really remains weak. I mean, it's really reflecting the tough economic conditions that are faced by both households and companies in South Africa. I mean, it should come as some sort of reprieve over the short term with the easing of the COVID-19 restrictions, which will ease the pain on some sectors, especially those that are worst affected by the previous round of restrictions. But nonetheless, credit demand is likely to improve gradually into the second half of the year as we unfold, but it could be constrained by the hiking cycle in interest rates. Already yesterday, there's coming out to say potentially we could have another 50 basis point increase in interest rates in 3 weeks' time. There's also high inflation and obviously the consumer being hit by higher fuel prices and also food prices. So, you know, it does take a bit of time to repair the damage that has been seen in the economy over the past 24 months. So obviously this private sector credit number is not, you know, something that we should be looking out for. I think the main thing that we really need to be looking out for is the inflation number and obviously what happens with regards to the Reserve Bank in the next few weeks.
Sure. Exxaro says it expects total coal sales volumes to decrease by 3% and exports more than a quarter in the 6 months to end June. Talk us through those figures.
So remember, Exxaro is obviously one of Eskom's largest coal sources, and I mean, you know, they continue to feel the pinch of the dysfunction in the Transnet rail network system, even though you've seen an uptick in the demand for coal from Europe, especially given the geopolitical tension out in Eastern Europe. So now, you know, the total coal sales volumes, they're expected to decrease by about 3%, and exports are also going to be more than a quarter in the 6 months to the end of June, obviously on the back of all the logistical constraints that we have seen out at Transnet, and obviously combined on the factor that, you know, Exxaro has had the sale of 3 non-core coal mines to some BE junior mine companies in September. But obviously, remember something important, coal is one of South Africa's largest foreign exchange earners. And obviously, the rail dysfunction that we have seen out at Transnet has really hampered the economy, given the fact that we export minerals such as chrome, iron ore, manganese. I mean, already mining in 2021 contributed about 480 billion to the GDP number, and that was up from around 350 billion the year before. And obviously, the inflow of dollars that we receive as a country obviously helps support the rand and obviously cushioning against inflation. But on the back of that also, you know, the Transnet issues have cost the mining sector about 16 billion in lost coal exports, about 2 billion rand in lost chrome exports, and about another 17 billion in lost iron ore exports. So it just shows you the fact that obviously the issues that we are having does affect the likes of Exxaro, it does affect the likes of Thungela and a whole host of other mining counterparts that obviously contribute to the economy.
Very well. Let's leave it there for now. Thank you for your time. The very latest in the world of business there, that market update by Matete Thulare, who's the head of foreign exchange execution at Rand Merchant Bank. Let's